5 tips for securing a loan with bad credit. Introduction. Bad credit can make it difficult to qualify for a loan, but it's not impossible. There are a few things you can do to improve your chances of securing a loan with bad credit. First, you need to understand your credit score and what factors are impacting it. You can get a free copy of your credit report from each of the 3 major credit bureaus every year. Second, you need to make sure you are consuming less credit than is available to you. This means using less than 30% of your credit card limit and paying off your balances in full each month. Third, you should try to diversify your credit portfolio by taking out a mix of loans, such as a personal loan, auto loan, or home equity loan. This will show lenders that you can handle different types of debt responsibly. Fourth, you should make all your payments on time, as this is the single most important factor in determining your credit score. Finally, you should try to avoid taking out loans with high interest rates and fees, as these can further damage your credit score. Make a strong case for why you need the loan. When you are applying for a loan with bad credit, you must make sure you provide a strong, compelling argument as to why you need the loan. Even though lenders may be willing to consider you, they still want to be sure that you will use the loan for its intended purpose. This is why it is important for you to explain your need for the loan and what you plan to do with it. For instance, you might explain why you need the loan to pay off existing debt or how it will help you start a small business. You should also explain how you plan to use the money and how it will benefit you financially. Be sure to provide all the required documents, such as income statements and bank statements, to prove that you can afford to make the loan payments. Doing this will help convince lenders that they won't lose their investment by giving you the loan and increase your chances of securing the loan. 2. Find the right lender. When looking for a loan with bad credit, you need to do your research and find the right lender for your needs. There are many different types of lenders who specialize in bad credit loans, and many of them specialize in different types of loans. For example, some lenders focus on secured loans, while others focus on unsecured loans. It's also a good idea to compare different lenders' rates and fees and determine which one is the best fit for your needs. Don't forget to look for any hidden fees that you might have to pay, such as origination fees, early repayment fees, or prepayment penalties. Once you have found the right lender, make sure you read the terms and conditions of the loan before signing any documents. Be willing to put up collateral. One way to increase your chances of being approved for a loan with bad credit is to be willing to put up collateral. Collateral is an asset, such as a piece of property, that you can use to guarantee the loan. If you default on the loan, the lender can seize the asset to recoup its losses. Before putting up collateral, make sure that the value of the asset is enough to cover the amount of the loan. You should also assess how much risk you are willing to take and whether the asset is something you can bear to lose if you fail to make the loan payments. 4. Have a detailed business plan. If you are applying for a loan to start a business, you will need to have a detailed business plan. A business plan should include an executive summary, industry analysis, competitive analysis, market analysis, financial plan, and marketing plan. It should also include the goal of the business and any strategies that you have in place to reach the goal. You must also be able to explain why the business is a good investment and what you plan to do to make it a success. You should also provide a detailed breakdown of how you plan to use the money and how it will help you grow the business. Having a good business plan will demonstrate your commitment to the venture and increase your chances of securing the loan. Prepare for a higher interest rate. When you are applying for a loan with bad credit, it's important to be prepared for a higher interest rate. This is because lenders view bad credit applicants as a higher risk and, as a result, they charge higher interest rates to compensate. Make sure you shop around and compare different lenders' rates and fees to find the best deal. Also, be aware of any additional fees and charges, such as origination fees, that may be associated with the loan. To lower the cost of the loan, you can try to negotiate a lower interest rate or a longer repayment term. Conclusion. Securing a loan with bad credit can be challenging, but it is possible. The key is to make sure you understand your credit score and what factors are impacting it. You also need to make a strong case for why you need the loan, find the right lender, be willing to put up collateral, have a detailed business plan, and be prepared for a higher interest rate. With the right plan in place, you can improve your chances of qualifying for a loan and make your dreams a reality.